$947,000 in 12 months, 1 hour per day. I am going to show you exactly how it works in this video. Not a summary, not a highlight reel, the actual system. The levels, the setups, the entries, the exits, and the exact logic behind every single trade. And I'm going to walk you through real trades, recent trades, setups that happened in the last few weeks so you can see this working in current market conditions. By the end of this video, you will understand this system well enough to start applying it yourself. That's the goal. Let's get into it. Before I show you the trades, I need to give you the foundation, because if you don't understand why this system works, you are going to struggle to apply it. You'll second guess your entries, you'll exit too early, and you'll miss the setups that don't look perfect on the surface. So let's start from the very beginning. The market is not random. The first thing you need to understand is that price movement is not random. It is not driven by retail traders buying and selling based on RSI signals or trendline breaks. Price is driven by institutions, hedge funds, banks, market makers, the entities that are moving hundreds of millions of dollars at a time. My godfather spent 30 years trading at Goldman Sachs before he retired, and the most important thing that he ever taught me is this: banks don't look at charts the way that we do. They don't care about moving averages or support resistance lines or Fibonacci. They look at where the most orders are sitting in the market. Because when you're a bank trying to fill a $500 million position, you need to know where you can actually get filled. And where are most of these orders sitting? At previous session highs and lows, and at the 8 a.m. opening range candle. Here's why. Think about what happens when the New York session makes a new high. Every trader who shorted near that high is now trapped. They're in drawdown. They're losing money. They're emotional. And what do trap traders do? They wait for price to come back to their entry so that they can get out at break even. So when price comes back to that session high, all those trapped shorts are desperately buying back their positions to exit. And what does that buying do? It pushes price higher. The same exact thing happens in reverse at session lows. Trapped longs sell to get out at break even, which can further fuel price lower. This is the psychology of trap traders, and the banks know it. They engineer moves to these session highs and lows because they know there's a massive amount of orders sitting there. Orders from trap traders trying to exit, and orders from breakout traders trying to enter. It's a liquidity pool, and the banks use these pools to fill their massive own positions. Once you understand this, you stop seeing the market as random. You start seeing it as a predictable, engineered process, which is what it truly is. And you start trading with the institutions instead of being their liquidity. My entire system is built on 3 levels. Every morning before the market opens, I mark these levels on my chart. Nothing else, no indicators, just these 3 levels. The first level is the 8 to 8:15 a.m. opening range candle. Every single morning, the first thing I do is I go on the 15-minute time frame. Right here, I go to ES Futures, and then I go to the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time, just like this. We're going to use this one as an example because I actually took a trade around this level, which we'll talk about a little bit later. Why is this candle so important? There are 3 main reasons. First, it has the highest volume of any 15-minute window during the entire trading day. The most orders are being placed, the most liquidity is being moved, and the most institutional activity is happening during this window. When volume is high, it tells you that the levels matter. I am marking this candle out using the rectangle tool on TradingView, and I'm marking out the top wick to the bottom wick. Also, double click on the rectangle and make sure that the midline is checked. When volume is high, that tells you that the level is important. Second, it creates a clear range that acts as a magnet for price throughout the day. Price will either break above this range and continue higher, break below and continue lower, or chop out inside it. The range becomes the battlefield for the day. Third, it removes the guesswork. Instead of looking at a full chart with hundreds of candles and trying to figure out which one matters, you are focused on one candle. This one candle tells you where the liquidity is and where you should be looking to enter a trade. And here's the psychology behind it. When price is sitting inside the 8 a.m. range, early traders are taking positions. Some go long at the bottom of the range, some go short at the top. And when price breaks out of that range, these traders are now trapped. The ones who went long are in drawdown if price breaks down, and the ones who went short are in drawdown if price breaks up. And when price comes back to retest the range after the break, these trap traders are sitting there waiting to exit at break even. That selling or buying pressure is what fuels the continuation move. You're not guessing, you're trading at the exact level where trap traders are forced to exit. The second type of level I mark out every morning is untested session highs and lows. These are the highs and lows from Asia, London, and New York trading session. The key word is untested. If a level has already been touched, it's no longer powerful. Once price is interacting with a level, the orders sitting there have been triggered, the liquidity has been collected, and the level loses its significance. But an untested level, that's a different story. All those orders are still sitting there waiting. Trap traders who entered at that level are still holding their positions, waiting for price to come back so that they can exit. Breakout traders have pending orders sitting just beyond it. The liquidity is fully intact. This is why untested levels act as magnets. Price will almost always come back to test them eventually, and when it does, that's where the high probability setups are. One more important detail, The further back a level is, the stronger it is. If an untested low is from 3 days ago, the traders sitting in those positions have been holding for 3 days. They are far more desperate to exit than somebody who's only been in the position for 4 hours. More desperation means more orders, meaning a stronger reaction when price hits that level. Now here's something that most traders get wrong. I don't trade all day. I only trade from 9:30 a.m. Eastern Standard Time to about 11:30 a.m. Eastern Standard Time every single day. Why? Because the highest probability setups happen during the first 2 hours of New York session. Institutional volume comes in at 8 a.m. when the banks start trading, and the real volatility and directional moves happen when the stock market opens at 9:30. After 10:30, the market often becomes choppy, the clear directional moves are done, the high probability setups are finished. I am not sitting at my desk all day. I am not over trading and forcing setups. I take 1 or 2 high probability trades during that 1 hour window, and then I move on with my day. Once I have these levels marked out, there are only 3 setups that I trade every single day. The first setup is the break and retest of the 8 to 8:15 a.m. Eastern Standard Time opening range. The second setup is a bounce of an untested session low, and the third setup is a rejection off of an untested session high. The first setup is the break and retest. This is probably my favorite setup because it is just so incredibly simple and it works very frequently. Step 1, mark out the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time on the 15-minute time frame using the rectangle tool. Make sure the midline is showing. Step 2, wait until 9:30 a.m. Eastern Standard Time to see which direction price is breaking. I am specifically looking at what price is doing right when the stock market opens and the volatility comes in. I'm not paying attention to any choppy movement before that. At 9:30, I want to see a clean break, ideally 5 to 10 points below the midpoint like we had right here. That break signals that institutions are pushing price in one direction and trap traders are being forced to exit. Step 3, wait for a retest. After the break, price will usually pull back to the bottom of the zone or the midpoint of the zone when we're looking for shorts, and we're looking for longs. It'll either pull back to the top of the zone or the midpoint. Our job as traders is to observe exactly where price is showing strength or weakness on the retest. What I'm looking for on the retest is simple. I want to see candle closures that respect the level. For example, when price is retesting the midpoint like it did today, I want to see candle closures below the midpoint when I'm looking for shorts, just like this. We tap the midpoint and then we continue to close below it. If price is failing to close above a level or below a level in any meaningful way, that's my confirmation, and I enter on the next candle. I like to have my stop loss at 5 to 8 points placed just on the other side of the level being respected. If the market is super volatile or if the opening range is big, I'll go up to a 10-point stop, but I keep it under 12. My target is 15 to 20 points, sometimes 30 if my stop loss is bigger, but it's almost always 15 to 20. I like to target the nearest untested session high or low or the previous day's high or low. If there's no untested levels nearby, I'll just target a solid 20 points. My risk to reward is a 1 to 3 minimum. I'm risking 5 to 8 points to make 15 to 20 points back. An important note, keep in mind that I wait for the stock market to open at 9:30 before entering. Even if the setup looks perfect at 8:45, the volume is too low before the open. I check volume on the 1-minute chart. If it's under 1,000, I don't trade. I want the volatility and volume that comes in at 9:30. You can check the volume by going on the 1 minute, double clicking on your chart, and then going to status line and checking volume. Once you have this checked, you can just hover over any candlestick and you'll see the volume right here. Setup 2 is a bounce off of an untested low. This setup is exactly what it sounds like. Price comes down to an untested session low, and I look for a bounce. Here's how I execute it. I have my untested lows marked out on the chart. When price approaches one of these levels, I drop down to the 5-minute and the 1-minute time frame, and I watch exactly how price is reacting. What I'm looking for is a strong rejection candle, meaning a candle with a long lower wick that touches the level but does not close below it. That wick tells me that sellers pushed the price below that level, but they were not able to keep it below that level because buyers stepped in and rejected it. The close back above the level shows me that buyers are now in control. With this setup, I like to have my stop loss at around 10 points because I like to target 30 or 40 points, giving me a risk to reward of 1 to 3 or 1 to 4. The key distinction here is identifying the strength of the level. If price comes to a level and blows straight through it without any reaction, no hesitation, no wick, no sign of respect, that level is weak. Delete it and look for the next untested low. Your success with this strategy and with the setup will come down to your ability to identify strength or weakness around a level. If price shows you zero respect for a level, it's telling you something. Listen to it. The third setup is a rejection off of an untested high. This is the mirror image of setup 2. Price comes up to an untested session high, and I look for a rejection. Same exact process as the low. I drop down to the 5-minute and the 1-minute to observe exactly how price is reacting when it hits the level. I'm looking for the same type of candle. You can see that even if we go down to the 5-minute here, price hit this level and then failed to close above it. My stop loss with this setup will be 10 points. I'll be targeting 30 to 40 points, targeting a 1 to 4 risk to reward or a 1 to 3. Same exact rules apply. If price breaks straight through an untested high without any sign of rejection, that's weak. move on. That's the entire system. 2 types of levels, 3 setups, 2 hours per day. The reason it generates the kind of returns I showed you at the start of the video is not because it's complicated. It's because it's built on the actual mechanics of how institutions move money. The edge is real, the logic is sound, and the data confirms it over hundreds of trades. Now let me show you exactly what this looks like in practice. So right here is an example of a trade that I took actually a few days ago that made me $11,000. The first thing we do is we mark out the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time on the 15-minute time frame. We then go on the 5-minute and we see what direction price is breaking out to. Clear the price is breaking out to the downside, so we're gonna look for a retest of this midpoint right here. Boom, got the retest, we're in our trade. Boom, filled, right? We caught 17 points on that. I was done trading at 10:30 a.m. Eastern Standard Time. I was only trading for an hour, started at 9:30, ended at 10:30. So right here, we're gonna go over the trade that I just kind of showed you guys earlier in the video. We have an untested high. We're gonna drop down to the 1 minute and see exactly how price wants to react to this high. Key thing here is that we only had 1 candle closure above it on the 1 minute time frame, but on the 5-minute and on the 15, we didn't have any candle closures, meaning we can go ahead and enter some shorts, and then boom, obviously we knew that this trade was gonna win, but I'm just showing you guys exactly how this looks in real time. This was a nice trade, 1 to 3 risk to reward. I made around 16 grand on this trade. All right, guys, so right here we have this untested low that has not been hit yet. And the key thing here is that this untested low is also the weekly low, meaning it's gonna be a very strong level. So let's see exactly how price is gonna react to this low, the 1 minute and on the 5-minute. Boom, okay guys, so price is very clearly showing that this low is still strong. We got 2 retests, right? So this is a beautiful place to enter the trade. My exact entry was actually right here. Looks a little sketchy, but boom, got it, right? So we got out of that trade for, I wanna say 37 points. Yep, 35 points with a 1 to 3 risk to reward, 11-point stop loss. I made around 20 grand on that trade. The key thing I want you guys to observe here is exactly how price showed that it was respecting this level, right? We hit this level and then we immediately started showing signs of strength by bouncing off of it once and then bouncing off of it again. So that was the 3rd trade example, was a bounce off of a low. All right, everybody, now we are on our 4th trade example. So right here, we can clearly see that price is breaking out to the downside, meaning we are gonna go ahead and look for a retest of this midpoint and then a continuation down. Now we're gonna go on the 5-minute time frame and we're gonna observe exactly what price is doing at 9:30. And we're gonna go ahead and plan out a trade, which is gonna go ahead and be a short right around 9:30 at this midpoint with a 5-point stop loss targeting 20 points today. And let's go ahead and let's see exactly what happens, guys. Let's go ahead and play. Boom. Okay, beautiful, beautiful trade. That played out very fast. And I want you guys to observe exactly how price rejected off of this midline, right? We had 0 candle closures above it. Some people might think that this is a candle closure. This is not. A candle closure means the entire candle is over a level. This would be a candle closure. So with this is not a candle closure. This is a rejection. And yeah, we caught 20 points to the downside. Beautiful, beautiful trade. I made around $15,000 off of that specific trade. For the last example, I'm gonna show you guys one more bounce off of an untested low. So right here, we have a New York low, and then we have a beautiful bounce off of it that actually happened in the London session. So for this trade, we're gonna go on the 5-minute and we're gonna observe exactly how price is reacting to this low. We're also gonna go on the 1 minute, and we can see that both on the 5-minute and on the 1 minute, price is showing a lot of respect to this low, meaning buyers are pushing price above this low. So we're gonna go ahead and look for some longs at this candle closure. We're gonna target 30 points and we're gonna have a risk to reward of 1 to 3 with a 10-point stop loss, just like that. Let's see what happens. Looking good, looking good. Boom, just hit our take profit, right? So there are 5 examples. So now you guys understand exactly what I'm looking for with these setups. All right, so now you have the system, you understand the levels, you understand the setups, you've seen 5 real trades that I've taken over the past 2.5 weeks. And I wanna be straight up with you about something, because I think the most valuable thing I can do for you is not just show you the strategy, it's to show you the full picture of what it actually takes to execute it consistently over time. Because here's what I've noticed after talking to hundreds of traders. Most people who learn a profitable strategy still don't make any money with it. And it's not because the strategy itself doesn't work. It's because of a few specific problems that come with manual trading. The first problem is the consistency problem. This system works because it has a statistical edge, but that edge only plays out if you execute it consistently, trade after trade, week after week. And consistency is harder than it sounds. You're gonna have a week where you take 2 or 3 losses in a row, and on that next setup, the one that's textbook perfect, you're gonna hesitate. You're gonna second guess the entry, or maybe you don't even take it. And that trade will be a 22-point winner. This happens to every manual trader. Not because they're undisciplined, but because the human brain is wired to avoid pain after repeated losses. After 3 losses, your brain is screaming at you to stop. And overriding that signal takes an enormous amount of mental energy that compounds over time. The result is that your real-world execution ends up being a fraction of what the strategy is actually capable of. You miss the big winners when you're in a losing streak, you overtrade when you're on a hot streak, and your results never quite match what the strategy should actually be producing. This strategy trades from around 9:30 to 11:30 a.m. Eastern Standard Time every day. 2 hours. That's a manageable commitment. But it's 2 hours every single day, 5 days a week, and it's not passive time. It's active, focused, high-stakes time. You need to be at your desk, watching the chart, ready to act the moment that a setup appears. If you have a job, that's a real problem. If you're in a different time zone, that's a problem. If you're sick one morning, you miss trades for the day. And the bigger issue is that you can only watch one chart at a time. This system works on ES, but the same setups appear on NQ, gold, and crude oil. Every morning, there are multiple setups across multiple markets. As a manual trader, you can only be in one place at once. Your income is capped by your attention, and your attention is limited. Let's say you're trading one ES contract. A 20-point winner is around $1,000. But what if you want to scale? What if you want to be trading 5 or 10 contracts? The strategy doesn't change, the setups don't change, but your psychology does. When you're risking $2,500 on a trade instead of $250, the emotional weight is completely different. The hesitation gets worse, the tendency to cut winners short gets worse, and the urge to move your stop loss gets worse. Scaling a manual trading operation is one of the hardest things in trading because every time you increase your size, you're also increasing the psychological pressure on the person executing the trades, which is you. I'm not telling you these things to discourage you. I'm telling you them because I've lived all three of them. I was profitable as a manual trader, but I was the weakest link in my own system. And once I understood that, I started asking a different question. What if the strategy ran itself? About 2 years ago, I hired a team of developers and we spent 2.5 years building algorithms that trade these exact same setups. The break and retest, the bounce off of untested lows, the rejections off of untested highs, 100% automatically. No hesitation, no emotions, no missed opportunities. The algorithms execute every setup perfectly and they run 24/7. Let me show you what they look like. Here's an example of some trades that our algorithm has taken. Right here, we made 65, plus 340, plus 200, small loss, plus 50, plus 230, plus 15, plus 185, plus $340. And we had another small loss right here, and then a few more big wins, another really big win. You can see over the last 90 days, we have a win rate around 61%, and our profit factor is 1.991, which means that we make 2 times as much as we lose per trade. The profit factor being this close to 2, meaning that we make twice as much when we win as we do when we lose. So for example, if we lose, $100, we're making $200 on our winners. That's why this P&L curve is going consistently up. Let me connect this directly back to the 3 problems I just described to you. The consistency problem. The algorithms execute with 100% consistency. They never hesitate after a losing streak. They never skip a setup because they're scared. Every trade that meets the criteria gets taken perfectly every single time. The statistical edge in the backtest is the statistical edge in live trading. The time and attention problem. The algorithms run automatically. You don't need to be at your desk at 9:30 a.m. You don't need to watch the chart for an hour. You set them up once and they do the work. And because they can monitor multiple markets simultaneously, they capture setups on ES, NQ, oil and gold all at the same time, which a manual trader would miss. The scale problem. The algorithms don't feel psychological pressure because they don't have emotions. They execute a 10 contract trade with the same precision as a 1 contract trade. Scaling is a function of capital, not psychology. The strategy is the same, the edge is the same. The only thing that changes is the execution is perfect every single time without you having to be there in front of the computer. Here's where I want to be completely straight with you. I can show you more back tests, more live trades, more equity curves, but at some point, the only thing that actually matters is whether these algorithms work in your account in real market conditions right now. And that's why I am doing something that I have never done before. I am so confident in these systems, in the edge they have, in the consistency they deliver, in the results they produce, that I'm going to let you try them out for completely free. Not a demo, not a simulation, a real live trial of the actual algorithms running in your actual trading account, taking real trades in real market conditions. For a limited time, I'm offering a free trial of our full algorithm suite. You'll get access to all of our algorithms. You can install them on your account. You can watch them trade the exact same setups that I showed you in this video. You see the results for yourself. No credit card, no commitment, no pitch, just the algorithms running in your account proving themselves. Because here's my belief. If you see these systems working in your own account, if you watch them take the exact setups I showed you, you won't need me to convince you of anything. The results will speak for themselves. The link to get access to the free trial is in the description below. Click it, fill out the short form, and within 24 hours you'll have the algorithms installed and running on your accounts. This is the most direct way I know to show you that everything I've talked about in this video is real. Not a backtest on a screen, not a highlight reel of my best trades, the actual systems in your account trading in real time. Click the link below, the trial is completely free, and I'll see you on the other side. Thank you for watching, and I hope you have a great day.